Overnight, the ECB President Christine Lagarde mentioned that there are still downside risks to the economy, that risks are still tilted to the downside. Would you say that that is the view of the majority of ECB members as well?
That's what we have collegially concluded, and there are risks to the downside, certainly. At the same time, the European economy is resilient, and for instance, the banking sector, when facing the global financial market turmoil, global banking sector turmoil, the European banking sector is quite resilient. We have double the buffers that we had compared to the pre-financial crisis era. But at the same time, of course, in terms of financial stability, you have to be always vigilant.
Of course.
And you have to learn the lessons from the previous crisis, and we have had many of them over the past 15 years. But at the same time, we shouldn't fight the last war, and we have to be eternally vigilant to see what are the pockets of or potential pockets of vulnerability. And we know that, for instance, non-bank financial institutions are an issue globally, and I think we should be clearly firmer, tougher in regard the regulation of non-bank financial institutions.
At the last meeting, understandably, the ECB decided to hike 50 basis points after all of the turmoil we saw in Switzerland, and there were a lot of questions at the press conference about that decision. And the president put forward this concept of separation principle, that the ECB have tools in their toolkit to deal with financial stability, and they also have tools in their toolkit to deal with price stability. Is it fair to say that the two are entirely separate? If things get really bad in the banking system, it's obviously going to have an impact on the growth outlook as well.
Both are our objectives. Our primary objective is price stability. That's anchored in the Treaty on European Union, and that makes up our mandate, and we work on the basis of that price stability mandate. But one of the key lessons of the financial crisis, the global financial crisis 10 years ago, has been that we have to be much more vigilant as regards financial stability. And we have improved our banking regulation and supervision. We have created, 10 years ago, we created the banking union with a single supervisory mechanism. So this means that we are much better equipped as regards financial stability today. The separation principle is valid, definitely, so that monetary policy is targeted for price stability in the first place. And then in addition to that, we have tools to address potential risks to financial stability if they emerge.
Yeah. Well, you say the words vigilant, you have to be vigilant. The ECB have hiked 6 times in 50 basis points increments.
Quite vigilantly, yes.
Yes. Is it time to slow down the size of the increments, or do you think ECB can still afford to push through 50 basis points hikes?
I think we have to look at the problem and start thinking from there, which is to say that inflation is still by far too high, and especially I'm concerned about core inflation, underlying inflation, which is neutralized from energy and food prices. We have been consistently, firmly normalizing monetary policy. We have taken steps to raise rates over the past period. So firmly, consistently since last July, we have raised policy rates. As core inflation is still rising, or has been rising, therefore it is important that we carry on and act consistently also in the future. And in my view, as regards our May decision, we have to practice what we preach, which is data dependency. And from my point of view, there are 2 key factors here. One is the question of evolution of core inflation until May, and the other one is to assess tightening of financial conditions, both because of the financial market turmoil and thanks to tightening of monetary policy, which is still passing through the economy. So these are the critical elements of our decision making, and in my view, it's important that we carry on and act consistently, but we have to calibrate our decision on the basis of an approach based on data dependence.
Should the core inflation number come in flat versus last month, so not decelerating, staying where it is, or even higher, would that prompt you personally to go for a 50 basis point hike?
It's not about one figure or one yardstick. It is a comprehensive assessment that I do, and I trust my colleagues also do in the Governing Council. So we look at several indicators, but you are right that core inflation is one of the key indicators, of course, and we will look at that very carefully before and in May. We should have by our May meeting, we should have the inflation figures for April, including core inflation.
It seems to me from talking to various policymakers that it really is going to be a toss-up between a 25 or a 50 at the next meeting, depending on that inflation print. Are rates right now in Europe in restrictive territory?
I think we have been reaching restrictive territory, and it's important that we don't relax prematurely. And therefore, as I said, we need to carry on and act consistently. And we have to calibrate our decision on the basis of the latest data we have available, especially concerning core inflation and concerning financing conditions.
Seems to me that the ECB are going to be in a higher for longer situation. It used to be lower for longer, and now higher for longer.
I think you have a point, and I would concur with that. In other words, once we reach the peak policy rate, perhaps over the summer, of course, on the basis of the current outlook, things may change, but probably over the summer we will reach the peak policy rate. Then we have to keep, in my view, we should keep the peak policy rate at a stable level for a sufficient period of time to see that core inflation is genuinely in a sustained decline, and we can see that inflation is indeed coming towards stabilizing towards our 2% target over the medium term.